another video. Today we have our Sunday sector review, so make sure before we get into the video you guys like this video, you guys subscribe to the channel, and let me know in the comments anything that I can improve on for these videos, as well as any subjects you guys would like me to talk about. Right, so first let's address the elephant in the room. I got the call last week wrong, right? So I thought we would pull back, and as you can see by this daily candle right here, we did everything but pull back, right? We pushed, we got a nice push right there. You can see it circled, highlighted. That is what happens, right? So after this candle, we printed a nice bullish candle here. That is not at all what I expected, as you could tell from the last video. But let's get into this video first. Let's talk about the economic data that we have coming up this week. First off, we have non-farm productivity. None of these are really going to be market moving this week, other than, well, okay. Now we are on the correct week. So let's see what we got here. Core retail sales coming out on Wednesday. That's pretty important, as well as FOMC meeting minutes. That is coming out Wednesday of this coming week, of this week. Initial jobless claims we have on Thursday. Yeah, nothing else really other than that. So something that I will be interested in would be the business inventory is coming out on Wednesday. Wednesday will be a big day. Industrial production year over year, we have that on Tuesday. So the data really is heaviest on Wednesday of this week, with jobless claims coming on Friday or on Thursday. That'll be interesting as well. So let's move into the charts. So like I said, I got this call wrong, but overall my bias still remains. I know it may be crazy for people to believe, but after a move like this off the bottom, this is 15% in, what is that, 5 weeks. That is a lot. I did see a stat today that said something like during the 2007 crash, there was, or maybe it was 2001, it was the dot-com bubble, but there was, it was like between 6 and 8, 20% or 18% plus rallies. So to me, the fact that we rallied this hard, this quick, leads me to be bearish. But the one thing, that I got wrong, and that happens, to everyone, honestly, is that bear market bounces, bear market rallies are always end up going higher than everyone thinks they'll go, because they got to push out the most pain, right? So if everyone, and looking back at it, 420, of course it's going to go past 420, right? Because that's such a big psych level. 420 in this 410 area, both of these levels are so big, from the psych side of things, that it makes sense that price would push past it and squeeze out anyone who wanted to get short there, like me. However, I do believe if you're averaging into this over the long term, 3-4 months out, this thing's gonna pull back. It's just a matter of when. And the earnings were okay. They weren't great. Guidance wasn't great. Guidance was okay. I don't know if I believe that this is the reaction really that we did bounce because of earnings, but I don't know that earnings deserves that. Especially future earnings, the guidance that we were mostly receiving. But anyways, this is where price is at, so let's look at it. We have our next supply zone, to me, is going to be up here, right there. That is, around 432 to 436. Wow, I mean, if price gets there, that's pretty amazing. That's quite the rally off the bottom. That's gonna be a 20% rally. So not out of the question, right? Like I said, there was a lot of 20% rallies in '08 in the dot-com bubble burst. Who's to say that that's not going to start happening again? I don't know. This rally off the bottom right here, this was a big one off the lows. This one rallied, 13%. So this one's definitely causing a lot of pain for investors. You're starting to see people FOMO into this and get long and buying and adding to positions here. That's one way to play it. It's not the way I would play it. But let's look at NQ now. Let's look at tech, and we can see that it looks like it's peaking out of this downtrend. This is interesting. So now, for me as a trader, I'm going to be watching last week's lows. Also a level that it scooped under right here, a prior low, and now so anyone who got short here is trapped right here, right? All these candles, anyone who was short here is trapped. So you could start to see some buying, and you could get a squeeze. This looks like the pretty obvious supply zone above, which is between 14.65 and 15,000. So that's something worth watching. Now let's get into some sectors. The semi sector, which has had a nice week. The dip got bought here. I thought this could be something that got rejected. We still never got over this 250 level that I was pointing out last week. Right, I said if it got over 250, then you really got to pay attention because things could get interesting from there. Didn't get there, but it is a bullish candle. You can see the volume was nice volume this week, and it got eaten up on my moving averages. That's quite interesting. Here was tech. It is starting to break out. The volume is low, but what you will notice is there are not a lot of sellers. So now it's going to come down to if the sellers come back or not. If the sellers don't come back, tech looks well positioned from here. Moving on to XLY, got eaten up off the trend line, but still, very poor volume. So doesn't look like people have much faith in the consumer discretionary, names. Let's look at some stocks in the consumer discretionary. That'll be like Tesla, Starbucks, Nike, Target. And as you can see, Tesla actually, you can see the buyers stepping up here. This is pretty good. From here, you can see our line starting to go up. So buyers are interested in Tesla down here at these levels. I'm biased. I'm a biased bull on Tesla, so I'll try to avoid that. Starbucks as well. Really nice volume gap here. You can see this room from here, 86 all the way up, back up to 108. I don't believe it gets there quite yet. This prior high will be resistance, but back to the sectors. Let's look at materials and industrials. Materials got eaten up somewhat, reclaimed kind of an important level here, the $77 level. So materials still holding strong. Financials are starting to recover. They were some of the names that were the most beaten down, so it's good to see financials kind of push back and try to recover some of these gains. XLE, really nice bullish candle. This nice inside bar, now just a push, a break of this last week's highs, and this thing has some room. It could make new highs. Look at how well this is what I would call a technical cool down. Look how well this cooled down the RSI, right? So you see how it was overbought. All of this was all overbought, and it's still pushed, right? So that is to tell you, this is proof that just because it's overbought does not mean it cannot go higher. It can go higher. But when it is overbought, you can start looking for, backwards plays, some reversal type plays. Even if it's short term, they will, like this from 78 down to, 72. Still a nice move. Anyways, so now RSI has curled down here. And this daily kind of looks like a little head and shoulders. Yeah. So you see that. You can see this is a shoulder. This is a head. This is a shoulder. Neckline is pretty much just this red line. Neckline is somewhere within this area. That's about the neckline. So you're watching for a push through and a retest like this. Push, retest, and push back up here in the supply. That's something worth watching for XLE. And XLP, the consumer staples. This could be, that's a tough chart. I don't really know much, but this could be a big Head and Shoulders. There's, you know, there's a shoulder, there's a head. This could be a right shoulder forming. And one way to see if these play out on these stocks is to go back and look if they've had a similar setup, right? So, yeah, this is kind of a similar setup, right? Right here, yeah, so see that. So you have this up here, starting from here, and then you also have this down here. See, this would be a shoulder, a head. This would be the head, and another shoulder. You know, maybe you could call it here, you could call it here, before it broke up. So it could be setting up for something like this, maybe. And healthcare, the last one. Healthcare still holding strong. Did have a nice candle this week. Decent volume. So that's what I'm seeing, guys. We can look at one more thing. Let's look at the oil markets. Where's CL and the weekly chart? All right, so you know it's holding this prior high. That's something that's worth noting. This $85 level. It might need to consolidate a little bit more, but looks good from there. Dixie pulling back, the dollar, right? This is the U.S. currency, the dollar. And as you can see, if we zoom way out, we are at this trend line, this downtrend line. So this is going to be interesting. Does it keep going down here? Does it hold? The monthly is starting to get overbought, so that leads me to believe it could trade, at least trade sideways, if not down. But I wouldn't expect huge pushes off of it. If it breaks back up over 106, this pivot, then you bulls start to get interested from there. So that's what I got, guys, this week. Thank you again. If you're still watching this video, thank you for watching. I appreciate you. Thank you for subscribing to the channel and liking the videos. So I'll be back with more videos. Peace.